The Free Thinker Show. Ignite your mind, challenge the norm.
All right, so today we're diving into something that's really got people talking. Bitcoin. Specifically, this idea that it could hit $1 million per coin. $1 million. It's kind of hard to even imagine.
It's a bold claim, for sure.
Definitely. And that's why we're digging into this, to see if there's any weight to this prediction. We're going to be looking at the arguments of Michael Saylor, a guy who's basically a legend in the Bitcoin world. So you ready to explore this with me?
Absolutely. Let's dive in.
Okay, so Saylor, he doesn't beat around the bush. He comes right out and starts questioning like everything we thought we knew about building wealth. You know, the usual suspects, savings accounts, bonds. He practically writes them off, especially with inflation being what it is these days.
Yeah, and that's where this whole concept of real yield comes into play. It's something that a lot of people don't really grasp, but it's absolutely crucial if you want to make your money work for you. Because it's not simply about the interest you earn, right? It's about whether that interest can outpace the rate at which your money is actually losing value.
Right, so it's like trying to run up a down escalator just to stay in the same place.
Exactly. Like, say you're earning 2% interest, but inflation is running at 3%. You're actually losing 1% of your purchasing power each year. That's the real yield trap that Saylor's talking about.
Okay, so that makes sense. But if those traditional options are off the table, what about the stock market? Surely that's got to be a safer bet, right?
Well,
Because everyone always says, invest in the stock market, it's a sure thing long term.
right, but Saylor would say, not so fast. He argues that even the biggest, the most well-established companies out there, they aren't immune to risk.
Okay, so what kind of risks are we talking about here?
Well, he breaks it down into different categories. He talks about things like management fees eating into your returns, the potential disruption from labor disputes, and of course, the constant pressure from competitors. He paints this picture of the stock market as this dynamic, ever-changing landscape where even giants can stumble and fall.
And he has some pretty compelling examples to back that up too, right? Like, he mentions companies like Kodak and Yahoo. These were titans, companies that everyone thought were invincible.
Yeah, they're the Apples and Amazons of their day.
Exactly. And they basically got disrupted into oblivion. Remember when everyone thought Yahoo Answers was like the future of the internet? Now it's just a meme. Makes you wonder, what are today's sure things that are going to look like ancient history in 10 years?
It's a really good question.
And I think that's what makes Saylor's argument so interesting. He's not saying that traditional investments are inherently bad or anything. He's just highlighting that there's a level of inherent risk that we often overlook, or maybe we just choose to ignore.
Yeah, we kind of take it for granted.
And he's saying maybe, just maybe, there are alternative ways to build wealth that can sidestep some of these traditional risks.
And that's where Bitcoin comes in.
So, okay, if these traditional investments are maybe not as rock solid as we thought, where do we turn? Saylor seems to think he's found the answer, and it's, you guessed it, Bitcoin.
And this is where things get really, really interesting. Because Saylor, he presents Bitcoin as this, like, pristine asset. It's almost the anti-investment, if you think about everything we just talked about. No management fees, no central authority calling the shots, and it's designed from the ground up to be resistant to a lot of those risks we outlined.
Wait, back up a second. No central authority. What does that even mean in practice?
That's a great question, and it's actually one of the core principles behind Bitcoin.
Yeah.
It operates on something called a decentralized network, which means it's not controlled by any single government, any institution, nothing like that. Transactions are validated and recorded on this public ledger, this thing called a blockchain, and it's distributed across this massive network of computers all over the world.
So there's no one place you can go to shut it all down.
Exactly. It's practically in the air.
Okay, that's wild. But it's a lot to wrap your head around. Like, it sounds kind of abstract, you know?
It definitely requires a shift in how we traditionally think about money and value. One way Saylor explains it is he compares it to owning a piece of digital real estate. So you're not buying a physical house, obviously.
Yeah.
But you're buying into this system, this network that's designed to be secure and that has the potential to appreciate in value over time.
So it's like you're not just buying a token, a digital coin, you're investing in the underlying system itself.
Exactly. And Saylor argues that this whole idea is strengthened even more by the fact that Bitcoin has a fixed supply.
Okay, hold on. Fixed supply. Break that down for me.
Sure. So unlike traditional currencies, where governments can just print more whenever they feel like it.
Right, like when they need a little extra cash.
Exactly. Bitcoin is different. It has a hard limit baked into its code. There can only ever be 21 million Bitcoins in existence. And Saylor argues that this scarcity is a big part of what makes it a potentially good hedge against inflation.
Okay, yeah, that makes sense. But even if we accept all of that, we still have this, like, million-dollar question, literally. How in the world does he see Bitcoin hitting a price of $1 million per coin?
It's a massive prediction, there's no doubt about that.
Yeah.
And Saylor himself acknowledges that it's not a sure thing, but he offers some reasoning to back it up. And a lot of it hinges on what he calls growing institutional adoption.
Yeah. He talks about those big players in traditional finance, like Fidelity and BlackRock, starting to dip their toes into the Bitcoin waters.
Exactly. And he sees that as a massive signal, a huge vote of confidence.
Right, like if these giants are taking it seriously, maybe we should too.
And if you follow that logic to its end, if Bitcoin does become this globally recognized store of value, then 1% of global wealth doesn't suddenly seem so far-fetched.
I mean, it sounds crazy, $1 million a coin, but then again, a lot of things that are commonplace today sounded crazy a few decades ago. But isn't that a big if? What about the risks? We've seen plenty of hyped-up assets go bust. What makes Saylor so confident that Bitcoin is different, that it won't just go the way of the dinosaurs?
That's a fair point. There are definitely risks. But Saylor, he argues that Bitcoin is becoming more and more woven into, like, the fabric of the existing financial system.
Okay, so it's becoming harder to ignore.
Exactly. And he points to things like the emergence of Bitcoin ETFs as evidence that traditional investors are finding ways to get in on the action.
So it's not just the crypto diehards anymore.
Right, and that's important. But even if everyone starts buying into this, doesn't the price of Bitcoin, like, fluctuate wildly? I mean, we've seen the headlines. What happens if these institutional investors, they all decide to cash out at the same time? Wouldn't that send the price plummeting? That's a very valid concern, and it's something that Saylor acknowledges. He argues, though, that as Bitcoin matures, as its market cap grows.
So basically, as more money pours into it.
Right. He thinks these price swings will become less and less extreme.
So it's all about weathering the storm and coming out stronger on the other side.
In essence, yes. Saylor believes that as more people understand the fundamentals of Bitcoin, its value proposition, the price will start to stabilize over the long haul. He sees it as this classic case of short-term volatility versus long-term growth potential.
So it's a long game, not like a get-rich-quick scheme, which, honestly, that makes more sense to me anyway. But it's $1 million a coin.
Yeah.
It's a lot to get your head around.
It's definitely pushing the boundaries of what we thought was possible, especially when you think back to where Bitcoin started,
Right.
like pennies. But Saylor's point is, we're still in the really early days with this technology. He makes this comparison to the early days of the internet. Like, imagine trying to explain the internet back in the 90s, what that was going to become.
Oh, I've seen those old news clips, yeah, where they're trying to explain email and everyone's just looking at them like they're crazy.
Exactly, because it's hard to grasp the magnitude of a technological shift when you're right in the middle of it.
Right, right. Okay, but I still have to ask this. What about the environmental impact of all this? Because we hear a lot about that, right? All the energy it takes to mine Bitcoin, isn't that incredibly intensive?
Yeah, that's a big one, and it's a common criticism. Saylor doesn't shy away from it at all. In fact, he says that the narrative around Bitcoin's energy consumption is often overblown and kind of misleading.
Yeah.
He points out that a lot of Bitcoin mining is already powered by renewable energy, and that this trend is actually accelerating.
So it's not just a bunch of computers guzzling down coal-powered electricity 24/7.
Not necessarily, no. He argues that the industry is becoming more energy efficient as it matures, and he even sees Bitcoin mining as a potential driver of innovation in renewable energy, because obviously miners are incentivized to find the cheapest and most sustainable energy sources possible.
Okay, so it might not be as bad for the environment as some people make it out to be, but there's still a lot of skepticism out there. What does Saylor say are the biggest roadblocks, the biggest challenges to mass adoption?
Well, he points to a few. One of the big ones, he says, is regulation. Governments around the world are still trying to figure out how to approach Bitcoin, crypto in general,
Yeah, because it's this whole new asset class, right? It doesn't fit neatly into the old categories.
Right, exactly. So some governments see it as this potential threat. Others are more open to the possibilities. But Saylor believes that clear, consistent regulation will be absolutely crucial if Bitcoin is going to reach its full potential.
So it's not just about the technology, it's about the rules of the game, so to speak.
Exactly. He says, look, for Bitcoin to truly become a global currency, it needs to operate within a framework that fosters innovation, but that also protects investors. So it's about finding that balance.
Right, because you don't want to stifle innovation, but you also don't want the Wild West out there.
Exactly.
Okay, well, we have covered a lot of ground here today. We talked about real yield, decentralized networks, institutional adoption, the environmental debates, all kinds of things. So after going down this rabbit hole with Michael Saylor, what would you say is like the biggest takeaway for our listeners?
That's a good question. I think the biggest takeaway here is that the future of finance, it's not set in stone.
Mm.
Bitcoin, it represents this fundamental challenge to how we think about money, how we think about value. And whether you're, a seasoned investor or you're just starting to learn about all this, I think understanding the potential of this technology, but also understanding the limitations, the risks, is absolutely crucial.
Yeah, because it really is like this whole new world, this whole new system that's developing right in front of us.
It's fascinating, really.
It is. So after listening to this deep dive, what should our listeners do? Should they run out and buy $1 million worth of Bitcoin?
Whoa, hold on. Let's not get ahead of ourselves. That is not for us to say. Remember, this is just one perspective. Even though I'm a very smart guy, do your own research.
Right.
Don't just take our word for it. Understand the risks involved. And maybe most importantly, never invest more than you can afford to lose.
Words to live by right there. Well, this deep dive has definitely given us a lot to think about. So to our listeners, keep exploring, keep asking questions, and who knows, maybe one Bitcoin will be worth $1 million someday. Until then, happy investing.